Welcome to Texas A&M's Campus Sustainability Month for 2021. I'm excited to have you here with us today for this really interesting virtual talk where we're going to be learning about sustainable investing. So it's something that I think everyone really needs to know about, just investing in general. So if you don't have, those kind of basics, you're going to be able to get some of that today. And even better, you're going to learn how to be able to invest your money in a more sustainable manner. So I think that'll be really interesting. Definitely really excited for Nick to share his knowledge with us today. Before I get to that, I just want to go over a couple things. So first, the best way for you to view this presentation is to watch it in side-by-side mode up in the top right, kind of where I'm talking. You should be able to change that if you would like to side-by-side mode. And then also I've enabled the live transcript. So if that's how you prefer to watch this presentation, please go ahead and turn that feature on. During Nick's talk here, if you have questions, at the end we'll have a chance to go over some of those questions. It'll give you some answers. So please ask questions in the chat or unmute yourself at the end. This is being recorded. It'll be on our YouTube, just so you're aware. And you may be here, excuse me, because you want some prizes. So what you're going to be doing is earning points by collecting code words, and you'll have those during each virtual event. And one code word is 1 point, and then every point you collect, you can use that for one entry into our random draw giveaway. And we'll have the code word. It'll be written on a PowerPoint slide, it'll be spoken, or it'll be written in the chat. And then what we'd like you to do is, after you've completed all of these virtual events, if you attend our big event tomorrow, Campus Sustainability Day, what we'd like you to do is collect all of your code words and just send them in just one email at the conclusion of the event. On 10/31/2021 is when everything will be due. You can just send that to sustainability@tamu.edu, and you can earn up to 5 points per event when you watch live. So there's going to be up to 5 code words per live event. And you can also you can double dip. So Maroon Base is a separate program at A&M here, and it's a way for you to get points basically for attending different events on campus. And you can even earn cash prizes up to $2,000. So you can check that out. Maroon Base, just download the app, find our event. And then if you want the complete prize rules, check out this webpage, or just you can go to our webpage, sustainability.tamu.edu, or you can see the direct link here. And what are the prizes, you may be wondering? So the grand prizes are, you can get yourself a Yeti cooler. You can choose between these two varieties. You could get yourself a GoPro Hero 8. So basically, if you win the grand prize, you get to choose one of these two items. And then there'll be two runner-ups who will get a Patagonia quarter zip pullover. And just for participating, even if you don't win one of these random prizes, you can get a water bottle if you get 2 code words. You can get a vintage t-shirt if you get 3 code words. And if you collect 5 code words, you can get both of those, t-shirt and the water bottle. And the code words do need to be from separate presentations, so you can't just use the same code words from one presentation. So with that, that's everything I want to go over. Now Nick is going to take it away, and he's going to teach us all about sustainable investing. So Nick, whenever you're ready.
All right, I'm going to figure out how to share my screen here. And are we good there, Ben? Awesome. Okay, well, welcome to the Sustainable Investing presentation. My name is Nick Balletto. I'm the Sustainability Analyst Intern here at the Office of Sustainability. Today, we're really going to get into kind of the surface of what investing is, and then get into kind of what it looks like from a sustainability perspective. Finally, we'll go through some strategies and how to get started investing so you can hit the ground running with all of the information you learn. Hopefully you'll leave this with the motivation to start investing, no matter where you are in life, and feel comfortable using the tools you've learned. So first I will get into a little bit about myself. I'm a business honors student with a minor in environmental geoscience. I'm from Houston, Texas. I'm a beginner investor with a passion for sustainability, specifically economic sustainability. I've been personally investing in college. I've gotten a lot of experience through reading, through my classes, and just my personal experience in the markets. I tend to focus on renewable energy, socially responsible companies, and new sustainability related technologies, which can be quite the adrenaline rush. So first, I'm going to ask the crowd a question. Does anybody want to give me their definition of what investing is? There are no wrong answers, but just throw one out there. And if you currently invest in any stocks too, that would be great to know about. And you can just throw it in the chat or just speak up, whichever one. Wow, okay, nobody's got one. Well, that's okay. So investing in, the definition I use is the act of allocating resources, usually money, with the expectation of generating an income or profit. So really, I'm mainly speaking about stock investments and held for the long term. So I don't really get into all that day trading where you buy and sell within the same day. I tried that and lost quite a bit of money. So a lot of people tend to ask me, what a stock is. So what I kind of tell them is take a pie, and that's your company. And then when you buy a stock within that company, that is like you're buying a slice of that pie. So really, your aim is to buy, into a company that will grow, and so that your slice of the pie will grow as well. So a lot of things can impact, the price of your stock. It really comes down to supply and demand, how many people want it, how much of it is available. But, other things like the political climate, natural disasters, and, scandals can really have a big impact on stock prices as well. But, it really comes down to supply and demand. Next, why should we invest our hard-earned money? I like to think about it as you want your money to make more money for you. I think of it as, one of the better ways to create like a passive income and really set yourself up for, financial freedom. And you really don't need a lot of money to begin these days with, the advent of, commission-free trading, $0 account minimums. Really, you are doing better off investing in stocks than you are putting it into a high yield savings account, which a lot of people do. And that is because inflation, the loss of buying power with your money is roughly 3%, and the highest earning savings account I've seen is only giving you 0.61%. So you're really losing almost 2.5% of your money just having it sit in that account. Whereas a stock investment, you can have, crazy returns like 7, 10, even 20%, which really outpaces the inflation and gets you more money. Another thing I like to talk about is that investing is for everyone, not just for, a lot of people with a lot of money. That's how it used to be. It used to be very expensive to trade stocks. But, with, like I said earlier, commission-free trading, $0 account minimums, and just with the plethora of information out there for free, it's really democratized the system and allowed, the average Joe like us to be able to invest without going broke. Next, I want to talk about compound interest, which, can be thought about as interest on your interest. Essentially, you're growing your money exponentially. You're not just taking, 7% on $100, and every year you're taking it on $100 plus what you made that year. So an example of this, and I know this is a lot of numbers here, but an example of this is if you invest like $10,000 when you're 20 years old, you'll end up at around age 50, getting ready for retirement, you'll end up with around $81,000. Whereas if you made that same investment of $10,000 at age 40 and you did all the exact same things, you're really only going to have about $20,000 in that 10-year time frame. And to put it, graphically, what you're looking at is the slope of the graph. So that blue line is, when you invested at 20, the slope of the graph is how fast your money is increasing. So you can see that, if you invest earlier, your money is going to start growing faster and faster. And when you invest later, it just doesn't have the time to get up there. So something I like to do is, set up periodic additions to my stock account because that increases the compound interest. So say every month I put in like $50, or, just a certain percentage of my paycheck or allowance. And that's really helpful to add to that compound interest. So now we'll get into what sustainable investing is. Really, it is a method of investing, and it's based on traditional financial principles combined with sustainability topics, such as workers' rights, water and ecosystem preservation and stewardship, and just treating the environment well. It's based on the assumption that companies tend to do better when they're operating through a sustainable lens. And research is kind of on the fence about this because it is a pretty new topic, but the idea is that companies that operate more sustainably are better long-term investments. They lead to better returns, and you have a better peace of mind as to what you're investing in. And the more people that invest in sustainable companies, the more companies will adopt sustainable practices. So it's got kind of this butterfly effect to it as well. So now we'll get into our sustainable strategies. First, we've got the environmental, social, and governance, or ESG risk. Next, we've got sustainable and responsible investing, which I call SRI. And then finally, we have impact investing. So I'll go ahead and get into the ESG first. So ESG investing is, taking into account the environmental, social, and governance factors of a company. The environmental factors being how a company performs as a steward of nature, the social aspect being, how a company treats people, whether that be employees, suppliers, customers, and even the community it operates in. And then governance is a little harder. It deals with, company leadership, the executive pay, internal controls and HR, like human resources, and shareholders' rights. So it's become increasingly popular among younger people and institutional investors as well to analyze the risk associated with an investment. Not necessarily to find companies that will have crazy returns, but avoid companies that will have big scandals, such as the BP oil spill or the Volkswagen Dieselgate scandal, where they faked their emissions from their cars. These two scandals had a large impact on the stock price of not just those companies, but the companies that operated within the same sector. They saw that their stock prices dropped significantly, and a lot of people lost a lot of money. So had people been investing with ESG in mind, they would have definitely avoided these companies and would have, not lost their money in that way, at least. So next, we've got sustainable and responsible investing, or SRI. And this is really similar to ESG, but it tends to have more of a focus on social sustainability topics. It tends to focus on companies that are doing well within gender empowerment, sustainability topics such as LGBTQ issues, things like that. An example of this would be TAMS, which everyone has probably heard of. I've got a picture up there of their business model. Every time you buy a shoe, they give a shoe. Every time you buy some glasses, they'll give glasses and eye care, and so on. So they're really using their profits to better the world around them, and that tends to correspond with higher returns. And then finally, we have impact investing. So impact investing is different in that it challenges the notion that social advancement and progress come from philanthropy rather than private investment. So essentially, people who impact invest don't really think that charity should be the way to go, but that investing and speaking with your money is the way to make real change. And another difference between the two is that you always invest in companies that have a measurable and easily seen impact. An example is a company called Craft 3. It's a nonprofit. It provides loans to those who can't access traditional financing, whether that be, low credit scores or no credit score. But Craft 3, all their money goes to environmental or social sustainability projects, such as, increasing the lighting efficiency within a lower income home. They also like to add solar panels to houses, things like that, that traditionally low income people can't provide for themselves. And then I've also got a little bonus strategy that I kind of made up myself. It's the one I follow. I call it an avoid advanced strategy. So it's pretty simple. Avoid, you avoid based on, certain companies, sectors, or industries. So, it's based on my personal principles. I avoid fossil fuels. I avoid gun manufacturers and pharmaceutical companies. And that's just based on my personal principles. And then the advanced side is, you like to invest where money is allocated toward companies that are making advancements in sustainability. And again, this is based on personal principle. I tend to invest a lot in companies that are doing something new or something innovative. An example being Rivian, which is the truck that you see on the screen. They're one of the first people to make an electric truck, and I think it looks pretty cool. But it's important to note that this advanced strategy is pretty risky. It's typically in smaller growth stage companies where the stock price can drop and rise with the tip of a hat. So oftentimes you'll find that politics are a big influence in the stock price in this advanced strategy. For example, when Biden was starting to win the election, solar and renewable energy stocks skyrocketed. But, after things calmed down and the hype kind of died, the stock price also dropped down as well. So that led me to losing quite a bit of money. So it's important to know that, it's pretty risky. Now we'll get into how you actually, invest. So before we get all scared and overwhelmed, I know I was before I started, just wanted to throw a fact out there. 40% of millennials have never invested once in their life. And that's a little bit disappointing, but also I found some peace within that, knowing that, I wasn't alone in the fact that I had no idea what I was doing. And then on the flip side, you've got 60% of millennials that have figured out how to invest. So I think that's pretty good. And it gives me a little bit of hope that if 60% of, a population can invest, I certainly think I should be able to as well. First thing is to talk about paper trading. This is something I do whenever I tell people how to start investing. Essentially, you are investing, but it's simulated. It's not using real money, and you're not risking any real money. You essentially say, I would buy this stock at this price, and then you would see where that stock price goes, and you would say, I would sell at this price, but you're not actually buying and selling. Typically, it was on paper traditionally, but there are apps, there are websites that you can use that track your portfolios for you, and you don't have to do all the math yourself. And I really suggest doing it for a few months before you start actually putting money in, because it gives great experience in trading. You're getting comfortable with the concept. You can test out your strategies, see which ones work, and you can just gauge whether or not your emotional response to a dropped stock will affect how you invest in the future. So the steps to invest, first step, you want to find a brokerage or a bank that lets you invest. Step 2, create your account. Step 3, deposit your money. Then you can research which stocks you want to buy, and then finally you buy the stock. So finding your brokerage. This is actually more difficult than I thought it would be. I'm just throwing out 2 brokerages that I find to be great for beginners. Robinhood, for example, is the one I started out on. I think it's a great starting point. It's got a really easy and slick interface. It looks great, and it's just easy to use. On the flip side, the cons, it's easier to make impulse decisions. So I found myself, it was so easy to buy and sell a stock that, I started buying and selling them all the time whenever, there was any inkling of me losing money. And then another thing is that they just really don't have the best customer service. So if that's something you think will be important to you, then maybe it would be ideal to look into the next one, which is TD Ameritrade. This is the brokerage I currently use. I like it because it's got great research and resources. You can really find out, a lot about what stocks you're looking at, how they're doing in comparison to other stocks, things like that. It's always on the leaderboard for, top beginner platforms for beginner investors. I find that, it is a little harder to get the hang of. The interface isn't as great as Robinhood, but it's also for a little more experienced people. And then another issue I came into contact with was that there were just so many account types that it was kind of hard to decide on which one I actually wanted to do. So it's important to keep that in mind. And, there are tons of different brokerages out there. These are just two of them that I suggest. And really, it's up to you and what you find important. So before I get on, I will talk about, the code word. This one will be stocks. And so that's one of your code words for this presentation. Speaking of stocks, how does one pick a stock? So I like to use a website called Finviz. It's just finviz.com. And this is what it'll look like whenever you open it up. It looks really overwhelming. There's a lot of numbers, a lot of new things on there. I ignore a lot of that. I click on the top screen. It says screener. Then you can get into all these different, metrics to find stocks. So it'll give you a list of, literally every stock they have. Right now, it says they've got like 8,000. We're going to narrow that down to, a couple that we really want to look into. So these little boxes at the top with the drop-down menus, we'll get into those. I suggest, finding a, oops, I didn't mean to do that. I suggest finding a sector right here. I usually click on here and you can get into all the types of sectors. They've got everything from like materials to banking to, solar companies, which is, what I was going to get into. So once you pick your sector, you go into the fundamental category. This will be the typical metrics you use to find stocks, typically used in the past as well. If you see on that yellow square to the top left over here under 30, that is the PE ratio, which essentially means, it's a ratio of how expensive the stock is compared to how much the stock earns. So really, it gives you an idea of how expensive your stock is. And you want to pick a stock, you want to pick a sector, then go into the PE ratio. And a quick Google search will tell you what their average PE ratio for that sector is. And I chose solar as my sector. And once you get into that, you want to find a stock where the PE ratio is under the average, indicating that it is underpriced or cheaper compared to the other stocks. So I know the solar PE ratio is averaged about 30. So in the drop down over here, I just put under 30 and it'll spit out these three stocks out of the 8,000 we had earlier. And over here, it gives you their PE ratio, and you can tell these are, below 30. You can see how expensive the stock is here. Some of them are a little more expensive than others. And you can see, what the price has done today. So it looks like today, those stocks lost quite a bit. Next, I typically pick one of these stocks. and then do a little more research, just looking at the news, just in the Google News, and see, what they're doing, if they're, in any scandals or anything that I should know about. And that's kind of really it. So how does buying a stock work? You pick the stock like we just did, using a strategy you're comfortable with. The PE ratio is a great way to go for beginners, and also taking into account, the ESG factors or the sustainability factors of it. That's where you come into the news area. So next, you want to determine how many shares you want to purchase. I typically say just go ahead and buy one at first. No more than that, just so you can get a hang of everything before you start really spending your money. And then whenever you're buying, you want to make sure you're buying with a market order or a limit order. A market order just says, I'll buy it at whatever price it is right now. And then a limit order says, I'll buy it whenever it reaches a certain price. So if a stock is at $15 and I want to buy it when it's at $20, I will put in a limit order for $20. And so I'll give a little walkthrough right here using TD Ameritrade. Once you open up the website, this is what it'll look like. This is the home page. You want to go up to the trade section here. Click on that. And then stocks and ETFs is the section you want to go to. I typically ignore just about everything else under that. I find it's very complicated, way too easy to lose money. But that red circle, stocks and ETFs, click on that. And then this is the page it'll take you to. And this is pretty uniform across all platforms. It'll have something like this that shows you how much money you have and then the actions you can take. So in the top right on that blue circle, you can see your buying power. That's essentially how much money you have to buy stocks. So right now I've got $38 to buy stocks. Down in that, bottom left with the green circle, you want to make sure that it says buy. You can't really sell a stock you don't have. So even if it says sell, it just won't work. But you want to make sure it'll say buy. Next, you want to put it in the quantity. Under quantity, I typically just go with one at first, but once you start to get more experience, you can do all sorts of things. Buy 100, buy 1,000, whatever you want. And then next, we've got the symbol. And the symbol is essentially an abbreviation of the company. So I put in a solar company called Sunworks, and their symbol is SUNW. And so once you put that in, you can see on the right side, it pops up all kinds of information about, the stock price in the past 5 days, what it's been doing today, the whole bid ask. I ignore those. Those are for buying options, which I avoid. But really, you just want to look at the price, the graph, and kind of what it's been doing over the past few days and months. So once you get into that, you put your symbol in for the stock you want to buy. Then you have your order type. And so the order type is where you put in market or limit. I just put in a market order. I always do market orders just because they're a lot easier. And then under that, you've got time in force. That's essentially how long your order is valid for. So say you put in a order for a stock, yesterday. You could set it to where you want to buy it, that order is in place for a few days to months. I always do it so that it cancels the order after the day, so that you don't end up buying more stocks accidentally without knowing it. So that's really all there is to buying a stock. With all the strategies that we have, you can pick ESG, you can pick SRI. It really comes down to your personal principles, what you find important in a company. And, if you stick to those, you'll tend to do well in the market. My avoid advanced strategy has done pretty well for me. I, last year ended up earning 350% on my portfolio. This year hasn't been as good, but I've been trying out different strategies as well. So it's really a lot of trial and error, making sure you're not, being too risky. And ultimately, it's really not as hard as it seems. But if anybody has any questions, I'll be happy to answer them.
Nick, you want to stop your screen share?
Oh, yeah, that'd be a good idea.
All right. Well, thank you, Nick. That was great. Definitely learned a lot. This is like the third or fourth time I've seen it, and I think I learned something new every time I see this presentation. So definitely very, very interesting. And we actually have a couple questions in the chat.
Oh.
Hopefully you all saw that I did enter some code words in the chat a little bit earlier. So check that out if you missed them. So here's the first question. When do you know when to take your money out? I am losing money in a company I invested and don't know if I should take the loss and invest in another company or just wait it out.
So typically, whenever I invest in a company, I kind of have a set loss that I will take. So if I invested in, say, Apple, and I set my loss at 10%, once that stock reaches, negative 10% of my investment, I go ahead and pull out no matter what, just because, that's the loss that I set. Because, it could go up, but chances are, it could go down. So I tend to play it on the safe side. And, if I'm not making money on an investment after, a few months max, then I go ahead and pull out because, you can definitely use that money in a more productive way. I don't know how much percentage you've lost, but 10% is generally what I say I'm comfortable losing on an investment. And that's really up to the individual, but it's important to set an amount that you're willing to lose. I know that sounds kind of crazy, but you've got to be comfortable losing some money when you're investing.
That's thanks, Nick. And also, like, I know with tax purposes, like if you were to sell a losing stock, can that also help you out in terms of your taxes?
I believe so. I think that whenever you record a loss, you realize a loss, then that is taken out of your taxes, essentially. Not necessarily you're paying less taxes because you lost money, but it'll decrease your gains. So if you've, say you made $10,000 and you lose $5,000 on a stock, then really you're only going to be taxed on that $5,000 that you earned net of everything.
So yeah, I guess then in that regard, it's not always a terrible move to sell off your losing stock as well. Like you may have lost that money, but it could benefit you in terms of when you file your taxes. If you owe the government money on like things you've earned in the stock market, it could benefit you in that way.
Right.
Thank you. That's good advice. And the next question, we actually have a couple questions for once. This is nice. Do you have any book recommendations on investing for beginners?
Yes, I have a book. It's called Investing 101, which there are probably a lot of them out there, but it's called Investing 101. It's really about this big, and it's just like a short handbook. I got it at Barnes and Noble, and I know they have them all the time there. And that's really been helpful for me to really learn about the market, how it, different factors affect the prices. And then also it gives you great strategy examples in there too, if you're, looking to expand your horizons on that aspect. Another book is called, it's not necessarily sustainable investing, but it's, about investing in general. It's called Rich Dad, Poor Dad. I read that some time ago and it's just been very helpful.
So the name of that book was Rich Dad, Poor Dad, and the other book was named what?
Investing 101. And I can't remember who was the author of either of those.
Put them in the chat. We don't have the authors, but that should give you a chance to check that out. All right, we actually have someone who has their hand raised, Yvonne. I'm assuming you'd like to maybe ask a question. You can unmute yourself and
Yeah.
your video on if you'd like.
Yeah, thanks. Will those brokers offer everything, like not only like solar panel companies and the kind of renewable energies, more traditional, that seems very obvious, but like could you find things like, I don't know, companies selling carbon credits or I don't know, more socially oriented that I don't know, companies just like Patagonia or things like that. Not this huge companies, but something smaller that are similar.
Yes, that's my short answer. The short answer is yes. You can really find, there are literally tens of thousands of stocks that you can buy on there. And so really the hard part is finding them. A lot of the stocks you're talking about, like smaller renewable companies, the issue with finding them is that just not a lot of people know about them. And so it's a lot harder to find them using the screeners, like we did on the Finviz website. But the short answer is yes, they do have them. It's just hard to find those smaller ones. I hope that answered your question.
It did. But then is there a guide that we can use to find those smaller ones, or not only the small ones, because like all these garment industries as well as Patagonia, Prana, I don't know, they're huge. But is there a way, or are you aware, or do you know where to find them?
I really, I find a lot of my stocks just looking through the news. I'll go on to sustainable news websites. They're generally environmentally focused, but they'll have like the social and governance aspects. But I search through the news, find companies that are doing good things, and oftentimes you won't be able to buy their stock because they're not a public company. They'll be private, like Patagonia. But the trick is, like on that Finviz screener, you can select your sector and, to find like the solar companies, for example, like they have a specific sector for solar companies. But it's really hard to find sectors that really have all of the ones that you're looking for. But yes, it is easy. I really just look through the news to find those kind of companies that are doing those good things, because they'll really be talking about them in the news if they're actually doing something good.
Oh, great. And then just real quick, how about like B Corps? Can you find them also on like some of those sources there on like Ameritrade, for instance?
I don't believe it has an option to look for those. I honestly haven't thought of that yet. So that's a very interesting question. I can look into that. But I don't believe they have an option to look based on that criteria.
Gotcha. Okay, thanks.
Also, just to kind of also answer a bit of your question in terms of like socially responsible investing. So one of the easiest ways to do that is through investing in ETFs. And there are ETFs that specialize in like equity, diversity, and inclusion. In the chat, I just put a bunch of ticker information. So if you search for these tickers, you can find out if your brokerages cover these stocks. But these are all stocks that are kind of related to sustainable investing. They're all ETFs. I don't invest in all of them personally. So I can't give you recommendations on which are better than the others, but these are things you could look into. I know that the NACP, the first one I listed, is like really looking at like racial equity and investing in that. She is investing in like women, companies that are doing a good job on measures that are good for women. DSI is like looking at kind of like, again, equity, diversity, inclusion, companies that are doing well in those areas. SUSA is like companies that are leading in sustainability. ICLN is looking at clean energy, ETF, stuff like that. So it's just some that I had found that I wanted to just share with people in case you were interested, but definitely do your own research on these. I'm not going to sit here and endorse these for you, but it's a good way to start.
Yeah, that's important to talk about is the ETFs. Essentially, that's like a basket of companies that you can invest in. So instead of just investing in Apple, you could invest in an ETF that takes into account all technology companies. So it's easy to diversify your portfolio and avoid risk. So that'll be something you guys could look into as well as ETFs. I invest in quite a few of those too.
Yeah, basically an ETF is like a way for you to invest like a fraction into like a bunch of different companies at once. So it's a way to try to, make sure you're not just losing in just one company. So you can kind of invest in a bunch of companies all at once. And then I also just listed a few resources for people too. We have NerdWallet, Yahoo Finance, US News and Money, and Investopedia. Nick, do you have any other resources you want to share with people?
I sometimes go on the Motley Fool, but I would be careful with them. They have great articles about, value of stocks, but sometimes they'll try to get you to pay for more information. So I never pay for the extra information. I don't think it's worth it.
Smart man. All right. We had a lot of questions. Trying to think if I have any else I could ask. I guess like Nick, what would you tell someone who was maybe scared to invest, or someone kind of trying to figure out the right time to invest, when is the right time?
Honestly, the right time is just whenever you can, like as soon as you can. It's more important because you're never really going to be able to time the market. That's practically impossible. The best thing to do is to have more time in the market. So the longer that you're invested, generally the higher your returns are going to be. So instead of waiting a few months because you want to see if the stock will go down, I suggest go ahead and invest now. I think, just go ahead and get in there, get your feet in the water. That's the most important thing. The typical investor will say, time in the market over timing the market. So yeah, I would just say get in as soon as you can, but also, don't do it without doing your proper research. You want to make sure that you're thinking about it before you get in.
Great. Yeah, thanks, Nick. I think that's really wonderful advice. The right time is like kind of like you said, it's as soon as possible. So I think that's great. And then I guess the last thing to wrap up is I think when you're investing your money, there's lots of ups and downs with the market. How would you kind of recommend that people would respond to, especially the downs, in the market? I know you kind of mentioned you might want to let a stock go based on it's a loss around 10%, but just kind of riding that up and down.
Yeah, it's important, to think that, even though a stock might go down quite a bit, there's a chance it can come back up. So you might want to hold on to it. So it really depends on the type of company you're looking at. When I'm looking at, growth stage companies where they're at the beginning of their life, once you lose, 5%, 10% on that, that's probably where you want to get out. But if you're looking at like a big established company like Apple or, Procter and Gamble, you can really have a lot more leeway with them because you know that they're most likely going to bounce back. But, I want to reiterate, whenever I invest in a stock, I always set a loss limit, what I'm willing to lose on that. And, on the flip side, I also, put in how much, when to pull out whenever it's at the high point. A couple times I've gotten into that habit where I just want to keep riding it out. I keep thinking it's going to go up. And then, it inevitably crashes after it goes up way too high. So I also set limits and to how high the stock will go. And typically I set that at about 15%. The losses I set at about 10%. But really it's up to how much money you're willing to lose. If you're really, strapped for money, I would set that at about 5%. So.
All right. And then I guess the final, just to wrap it up, is you're also looking at like long-term investing, right? You're not trying to make decisions. So maybe like, would you say it's good advice to not look at like the tracker every day?
I would not look at it every day.
No.
I tended to do like, once I started looking at it every day is when I started losing money. Once you start looking at it, once every 2 weeks, once a month, even, you're going to be doing a lot better just because you're not going to be as emotionally invested into it. You also just, when you're investing for long term, the ups and downs really don't matter as much. What you're really looking for are long-term trends. So like a day's price change is really nothing. But if this stock's been going down for say 30 days, then that's something you kind of want to reevaluate. But just like a day or two of a stock being down, that could just be set to market forces. A lot of people are maybe just selling off their stock.
Awesome. Great. Thank you so much, Nick. Unless we have any other questions, that'll wrap it up. I guess we got into the questions so quick, I forgot to talk about what we have coming up next. So let me just do that really quickly here. So coming up, well, first tomorrow, it's not on the slide, but tomorrow come out, we have our first in-person event, and it feels like 10 years. But since the pandemic hit, we're going to have our first in-person event, Campus Sustainability Day. It'll be outside. We'll all be wearing masks at our table, so you can feel safe interacting with us. And but we'll be giving away these awesome t-shirts. Really excited for you guys to get your hands on them. Come out and get those, interact with all the awesome people on campus working to make our campus more sustainable. So hope to see you there. It's tomorrow. It's in Rudder Plaza. It's from 10 to 2. Come out, tell your friends, tell your family, everyone, bring everybody out. And then on the screen is our next virtual presentation. So we just learned about really amazing investing tips from Nick. Again, thank you, Nick. That was a wonderful presentation. Learned a lot. Next, we can learn about how you can have a healthier diet for the planet. Could be better for you for your health, and it could also be better for the long-term longevity of our planet. So check that out. Stephen and Corley will be talking about diets for a healthier planet tomorrow. And then just be on the lookout if you're interested. We're going to have an internship program. Nick was an intern in our program a few years ago, and he transitioned into a student worker position based on his excellent performance. And if you want to, potentially be in his position one day, once he graduates, if his job opens up, you can apply here to join their initial program. And applications open on November 8th, and they close on November 22nd. So check that out if you want to be cool like Nick. So that's everything we got coming up. And again, thank you, Nick. Wonderful job. And I hope everyone has a great rest of your day. Thank you all.
Thank you.